Hello, you're very welcome to today's webinar where we're going to talk about tax structuring and tax treatment of employee and executive exits for Irish tax purposes. Just by way of introduction, my name is Robert Dever. I am a partner and head of tax here in Pinson Masons in Ireland. Just to speak very generally about my practice, so in addition to employee exits and executive exits, I also do a lot of corporate work. I do a lot of M&A, reorganizations, restructurings, a lot of property, VAT, FDI work for business looking to establish here in Ireland. But I do a lot of work in employee and executive exit as well. So just to set that out to start. Okay, so just in terms of what we're going to cover in today's session. So firstly, we're just going to start with a very general introduction as to why tax is important in terms of employee exits. And just talk a bit about that. And then we're going to go into the taxation treatment of various elements of termination packages. Now, every termination package that you come across will be different in its own way. They'll have a unique set of circumstances. But what we're going to cover is almost everything that you'll see in an employee exit package, and how that's taxed, of course. We're going to talk about some other lump sum payments on termination, which very much relates around the pensions, which I think is important as well. And then we're going to talk about tax reliefs and exemptions around certain payments, particularly around ex gratia payments, which tend to be quite important in terms of the quantum of those payments. We're also going to talk about legal fees in terms of employers contributing to employees' leaving fees when they're departing. And we're also going to talk about some structuring opportunities, and then we're going to finish off then with some case studies in terms of kind of real life situations and the kind of the tax kind of issues that come up on a day-to-day basis. Okay, so why is tax important for employee exits? Well, I suppose from my perspective, I very much advise employers. That's just in terms of the firm I work with. That's just the client I would advise more often than not. And I suppose from that perspective, employers are very much focused on what they need to do in terms of withholding tax. So a lot of my clients are very much risk adverse and are very slow to take on any particular spicy risks that might be associated with structuring packages in certain ways. And it'll want to make sure that if there's tax to be withheld in terms of payroll taxes, that it is, and that's all very much above board. They won't be looking to do any kind of anti-avoidance or any kind of spicy tax structure. From an employee perspective, of course, they just want to know what they're going to receive into their hands tax-free, essentially, or after tax. They want to know exactly what they need to do. Often in these kind of situations, you're talking about a redundancy or a situation where, unfortunately, the relationship hasn't worked out. And often they can find themselves faced with having no job for a period of time.